Today, we're diving into a unique investment opportunity that has been catching a lot of attention lately. The Simplify Volatility Premium ETF, or SVOL. This ETF offers a whopping 16% annual dividend yield, paid out monthly. Whether you're a seasoned investor or just starting out, understanding how SVOL works could be a game changer for your portfolio. Let's break it down. First off, what exactly is SVOL? The Simplify Volatility Premium ETF is designed to provide investment results that correspond to about 1/5 to 3/10 of the inverse performance of the CBOE Volatility Index, also known as the VIX. In simpler terms, this ETF is betting against the volatility of the market. The idea is that when the VIX rises, SVOL aims to generate income by selling options on volatility indices. This unique strategy allows SVOL to deliver high yields, which makes it an attractive option for income-focused investors. Now let's talk about the expense ratio. SVOL has an expense ratio of 1.16%. This might seem high compared to other ETFs, but it's important to remember that SVOL is an actively managed fund. The management team is constantly adjusting the portfolio to maximize returns and manage risks, which justifies the higher cost. This fee covers the expenses related to the fund's operations, including management fees, administrative costs, and other operational expenses. For investors, the key takeaway is that you're paying for professional management that's aiming to deliver those high yields. One of the most compelling aspects of SVOL is its current distribution yield, which stands at an impressive 16% annually. This yield is paid out monthly, providing a consistent income stream for investors. To put this into perspective, most traditional ETFs offer yields in the range of 2 to 3%, so SVOL's 16% yield is significantly higher. This high yield is largely due to the premiums collected from selling options, which is a key part of SVOL's strategy. For investors looking for regular income, this makes SVOL a very attractive option. Performance is always a critical factor when evaluating any investment. For SVOL, the annualized performance over the past year has been 14.13%, and since its inception, it has averaged 12.05% annually. These are strong numbers, especially considering the ETF's high yield. It's important to note that these returns include the reinvestment of the 16% dividend yield, which helps compound the value to this investment. If you had invested in SVOL since it launched, you would have seen consistent returns, which is a testament to the effectiveness of its strategy. Let's take a closer look at what's inside SVOL. SVOL is what's known as an all-in-one ETF, meaning it holds a variety of different ETFs within its portfolio. Some of the top holdings include AAGH, BUCK, CDX, and HIGH, as well as Treasury bills. This diversified approach helps to spread risk across multiple assets, reducing the impact of any single holding's performance on the overall portfolio. By holding different ETFs and Treasury bills, SVOL ensures a balanced approach that focuses on both growth and income. Next, let's discuss SVOL's distribution history. Over the past 12 months, SVOL has consistently paid out $0.30 per share each month. This consistency is key for income-focused investors, as it provides a reliable stream of income. With the current share price around $22.50, the yield from these distributions is quite substantial. This consistent payout is one of the main reasons why SVOL is appealing to those who are looking for regular income from their investments. Now, while SVOL has a lot of positives, it's important to also consider the risks. Like any investment, SVOL is not without its downsides. The primary risk is the potential for price volatility. Since SVOL is tied to the VIX, its share price can fluctuate more than traditional ETFs. However, one of the benefits of SVOL is that its monthly distributions can help offset this volatility. Even if the share price drops, the consistent monthly payouts can provide a cushion, ensuring that your income remains steady. Additionally, because SVOL utilizes a covered call strategy, the risk is somewhat mitigated compared to ETFs that don't use such strategies. To give you a better idea of how SVOL performs, let's compare it to VOO, one of the most popular ETFs that tracks the S&P 500. If you had invested $10,000 in SVOL when it launched on May 13, 2021, and reinvested all dividends, your investment would have performed almost identically to VOO, with both ETFs averaging around 11% annual returns. However, If you had chosen not to reinvest the dividends from SVOL, your returns would have been about 3% lower than VOO, averaging around 8% annually. This comparison highlights that even if you choose to cash out your dividends, SVOL still offers competitive returns while providing a steady income stream. So why might SVOL be considered a safer investment, particularly for those seeking monthly income? The key lies in its strategy of collecting premiums from covered calls. Unlike ETFs that rely solely on capital appreciation, SVOL's income is more predictable because it comes from the consistent premiums generated by these covered calls. And because SVOL is an ETF, it's inherently diversified across multiple assets, which reduces the risk compared to investing in a single stock or sector. While it's true that over time, these types of ETFs may limit growth compared to those without covered calls, the trade-off is a more stable and stress-free income stream. For investors prioritizing consistent income and lower stress, SVOL could be a valuable addition to their portfolio. Before we wrap up, remember that this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions and consider consulting with a financial advisor to tailor your strategy to your personal financial goals. In conclusion, SVOL offers an intriguing opportunity for investors looking for high income with the added benefit of diversification and reduced risk compared to other options. If you're seeking a steady monthly income while minimizing the stress of market timing, SVOL could be a powerful tool on your journey to financial freedom. Thanks for watching, and remember, stay informed, stay invested, and take control of your time. See you in the next video.